Welcome. I'm Ira Epstein, and I'm here to talk to you about a confluence that's going to take place, the gathering of a number of central bankers at one time, the next meetings, going to cut interest rates, and the impact that'll have going possibly into year end. So let's take a look at some of this right now. What I'm looking at is the falling amongst a host of well-developed economies, specifically Canada, the United States, Bank of England, European Central Bank, at their next meetings deciding to cut interest rates one more time. Now, why do central banks cut interest rates? Well, first off, they often get too high because you go in cycles, low inflation, high inflation. I don't have to go over the fact with you that COVID created a lot of high inflation because we had to save the economies by almost having helicopter money in many cases, going out in these different economies to rescue them. And now you've got to rein that in. And this takes years to get done. But we're at that point in time where now we have to beat the inflation animal. And that's been going on for months now by tight interest rates, high interest rates. And as we take it down, a couple of things happen. You slow the economy and inflation will fall with a falling economy, but you don't want it to fall to get a recession. That is the thing that you try to avoid with it. So you avoid that, and you don't want to get unemployment that runs away and the economy falls on its face because you don't have people working. We in America have been very lucky because our unemployment numbers have stayed down, but that's not the case everywhere that you look. So the pressure is on to make sure in the U.S. it doesn't happen, and the pressure is on for other economies to now keep the inflation coming down, but start helping the employment part of their economy. So what central bankers do now is they move towards what they call a neutral interest rate. It's that ideal point where you get an interest rate down to the point where you still are spurring along employment, but you're stopping inflation from growing from the money becoming too easy, and it's not recausing inflation. It only stays that way for brief periods of time, and markets typically overshoot it. But we're at the part of the cycle where inflation was going up, and now that it's coming down, the recession has to be avoided. You don't want that recession to kick in. The UK today is a perfect example of this. It came out from its Office of National Statistics, and it showed consumer prices only went up 1.7%. We haven't seen that in a couple of years. So that's really phenomenal. It also beat the pace of August, which was 2.2%, so the trajectory is going in the right direction. It's lower than what was looked at by economists, but more important, the bank's own projection had been for September 2.1%, so now you're under a magic 2% number. Consumer prices under that? Well, what does the bank want to do? They take a look and they say to themselves, hey, this has been a long time coming. They look at inflation from services, other areas. They always compare because there's different parts they look at, but its own forecast just keeps seeing all inflation numbers falling. And this gives you an idea on this report, not so much where real inflation numbers are, but as the bank does, they look at it in the 12 categories that people really spend money on, which I like a lot, and then they look at what it's doing. And if you look at this, these categories are down to about the 2% area. So what does it mean in plain English? It means that we are now getting to the point where you're going to see the European Central Bank cut its interest rate tomorrow, probably by 25 basis points. After that, we're going to see where we get with the Bank of Canada. They're coming right on board. I believe they're the 23rd. They're talking 50 basis points in cuts. Bank of England and the U.S. are, I believe, on the same day, November 7th. I think we'll see both banks go 25 basis points. There'll be people that argue you shouldn't cut it all if the numbers are good in the U.S., but my guess is the Fed can afford to keep getting ahead of the curve. So you've got that coming. How does that apply to the futures markets? What's it going to do for demand for grains, iron ore, copper, electricity? I can go on and on. The game is on. Year-end rallies often happen in stock markets because of it. Keep your eye on everything. This should be a very interesting close of the year. Now, let's take a look at how we can give you information about this. If you go to IraEpstein.com, You'll come to our website and you'll see we have our research area for you. You can click in here, get our different products. If you're looking to learn trading of all types, they're through here. We cover futures, ETFs, the stock markets, and so on. And each day you're going to be able to come in and look at different videos on the website to give you an idea of our thoughts on the market. So, IraEpstein.com. I hope you join with us. Have yourself a great end of the year. Take care now.